Can Powell get fired? Like, that's a big question. And what exactly does it mean for interest rates, inflation, and home buyers today? I mean, there's so much noise happening right now around Jerome Powell. Rumors that he might resign on one end and then pressure from the administration to remove him on the other. And all of this is happening at the exact time that home buyers simply need one thing, and that's certainty. But before I even get started, let's be absolutely clear that this video and ultimately the outcome of this standoff isn't about politics. It's about trust. Regardless if Powell is forced out or he resigns early, it shakes the very foundation of what drives mortgage rates and market confidence. So I want to break this down. What's happening, what's at risk, and what buyers need to know right now. Trump's advisors are turning up the heat. They're mounting public pressure on Powell, accusing him of mismanaging a $2.5 billion Fed headquarters renovation, saying it's bloated, even illegal. Kevin Warsh and Kevin Hassett have come out, the two top current contenders, to replace Powell when his term is up. They're calling for a regime change at the Fed, stating that the Fed is bloated, that it's off track, and it's too late. One of them even went so far as to say it's time to break some heads. Meanwhile, the administration is calling for a 300 basis point rate cut. I mean, I just want to take a step back and put that into perspective for you for a moment. I mean, the current Fed rate right now is 4.25 to 4.5. With the two expected cuts in 2025, that means we would end the year at 3.75 to 4%. Another two expected in 2026 would bring us to 3.25 to 3.5, with the long-term anticipated Fed rate floor of 3%. I mean, if Trump were to actually get his 300 basis point cut, that would put the Fed rate near 1%. The last time the Fed rate was 1% was during the pandemic. Then the 2008 financial crisis before that, September 11 attacks before that, and the right after the dot-com bubble. That's not the economy that we're in today. Now, here's the real problem. If Powell resigns early or is pushed out, it breaks a long-standing tradition of central bank independence. Investors will likely panic, not just because Powell is gone, but because it sends a message that the Fed can be politically manipulated. That erodes global trust in the Fed, and it raises fears about inflation tolerance. It also forces debt holders to demand higher yields, and higher yields means higher interest rates. Now, realistically, markets don't believe Powell's removal will happen, but they've started to price in that risk. The poly market has a 1 in 5 chance of Powell being removed. That's up from 10% a month ago. This is per Reuters. If he does get removed, Deutsche Bank said that this could spike Treasury yields by 30 to 40 basis points in a singular day, drop the dollar by 3 to 4%, erode global debt investors' trust in the Fed, and impact affordability, as lenders will get cautious, pushing up rates further by increasing the mortgage rate spread, freezing more buyers on the sidelines. Can Powell actually get fired? Technically, no, not easily. The law protects Fed chairs from political firings. Only for cause, and Powell has stated clearly he will not resign unless forced. Even if the administration tries to remove him, Powell could stay on the Fed board. The rest of the committee would certainly still treat him as the chair. So removing him would break 100 years of central bank independence, trigger legal chaos, and massive market volatility. That's why even Trump, when pressed by CNN last week, said he won't fire Powell, at least not yet. So let's break away from the drama conversation and instead talk about the Fed's day job, which is to guide U.S. monetary policy to promote stable prices, maximum employment, and a healthy financial system. So here's what the Fed is watching: inflation and labor. That's it. Not pressure, not headlines, just data. Now, one could argue to a fault, but that's not what this video is debating. Inflation today is tame. In fact, CPI just was released this morning with a headline month over month hitting the expected 0.3% growth, and core beating expectations, coming in at 0.2% versus the 0.3% expected, pushing the annual CPI core rate to 2.9%, which is up from last month's 2.8%, but lower than the 3% expected. Now, core goods are up 0.7% year over year. This is showing an indication of tariff impacts, but it's being offset on the other side by other lower inflation data. Now, we also saw jobless claims just hit a 5-month low, and July's job report beat expectations. So overall, this is not a recession. This is resilient growth, even with tariffs and labor pressures. In fact, the probability of a recession in 2025 has now dropped from 66% to 22%. And with the S&P and crypto both at record highs, cutting rates too soon risks pouring gas on asset bubbles, which is why, to date, Powell has stuck to his call of only 2 cuts in 2025. What does all of this mean for home buyers today? It means headline drama and uncertainty is stalling decisions. Humans thrive in certainty, and buyers just want a signal as to when is the right time to act. Here's the truth. Unless labor breaks or inflation tanks, rates are not going anywhere fast. The Fed is data-driven, not politically driven. Powell's not budging. I don't personally believe Powell will be fired. I also don't believe he'll quit. For now, 2 rate cuts are still the most likely path for 2025. So if I'm sitting here trying to make the best decision I can regarding home ownership and wealth stabilization, I'm seeing more sellers willing to negotiate based on more inventory and choices available. I know that when rates dip, even by a quarter, we're seeing upwards of 10% more buyers come out to the market. When rates drop a full 1%, another 5 million households can afford home ownership. I also know that should this threat to oust Powell continue, rates due to the long-term bond risk as well as financial uncertainty widening the mortgage spread could in fact raise mortgage rates, putting affordability further out of reach. Bottom line, while headlines and political uncertainty make decision-making more difficult, knowing your numbers and having a defined wealth plan gives you the certainty most people are looking for right now. I'm here to help. Whether you're looking to buy your first home, your move-up home, or investment property in 2025 or 5 years from now, I'm here. Nicole Ruth, it's my pleasure to keep you updated.